What we saw today was a pre-election budget from a Chancellor with quite limited room for manoeuvre. And he had limited room for manoeuvre because actually nothing much has changed in terms of the forecasts since November. And back in November, he pushed himself right up against the limits of his own fiscal rules. What he's done is find a reasonably significant amount of money, £10 billion, to cut national insurance. That's on top of the national insurance cut we had announced in November. Put those two together, and people on somewhat above average earnings will be benefiting to the tune of about £1,000 a year or more. So put them together, this is a pretty substantial and serious tax cut. But of course, that has to be in the context of bigger tax rises over this Parliament and beyond, particularly the freezes in income tax thresholds and allowances. How did the Chancellor afford this? Well, partly he's just used up more of the tiny amount of headroom he had before, so he's meeting his fiscal target by an even tinier smidgen than he was back in November, and partly he's found some additional tax increases on non-doms, second properties, a little bit from vapes. So put all of those together and he's just about found room for that 2p of national insurance. The thing we didn't hear very much about, of course, is what's going to happen to spending in the next Parliament. The Chancellor has maintained his view that that will go up just by 1% a year, but with pressures on health and defence and so on, that will continue to mean cuts in other parts of the public sector, cuts which, of course, we heard nothing about.